Hey everybody, Chris Johnson here with MoneyMorning.com to talk about a little buy the rumor, sell the news, WWDC, and of course, Apple stock. If you didn't see it in the news this week, WWDC kicked off. This is the Worldwide Developers Conference that Apple hosts every year. It's an event where they get everyone in the room so they can roll out new products, new security features, new software that surrounds all of their products. So the whole Apple ecosphere is on display here. It's important for the developers to do this because they're the ones that are going to be writing software over the next year as these products roll out. Now, just as important as that is, it's important to investors and traders as well. Why? Well, new products, new software, all of that are part of the lifeblood of the valuation of a company looking forward. Growth stocks stop growing once they stop developing. The WWDC is all about development. So investors take a keen interest in what is being rolled out. But more interestingly, those short-term investors, people who are looking at the stock on a day-to-day basis, have probably noticed that we tend to see a little bit of a buy the rumor, sell the news. Now, Apple is no stranger when it comes to buy the rumor, sell the news. Let me talk about this phenomenon for a second. When the street knows, or when investors know that an event is coming, whether it's an earnings or a developers conference event, something that is likely to move the stock, they'll try to front run that just a little bit. That is the buy the rumor. So they'll buy the rumors of what's going to go on at that event. And of course, running up to the WWDC, everybody was talking about the new AR or VR headset that Apple is going to be rolling out that would get them into that age of you and I watching everything on our phone, on our face, let's say it, or through a pair of ski goggles. But anyhow, the rumors were swirling and investors bought it. If you look at the stock here, we saw it go from around 176, 175 or so up to $185 during the first day of the event. This little run up right here is what we attribute to buying the rumor. Investors getting excited for that event as it approaches. Now, just as much as they get excited, there are some people who take that opportunity to profit off of that quick 3 or 4% run, and that is what we refer to as selling the news. These sell the news events are usually short-lived and oftentimes offer an opportunity for people to get into the stock at a little bit of a discount, especially away from that peak. So keep in mind, as we're running into these events, you want to be very aware of how excited the market is getting. Sometimes they overshoot the goal in terms of pricing, and they price the stock for perfection. That's when a sell the news opportunity is going to present itself, in which case Apple has been very, very much a sell the news type of company after these events. How much? Let me show you the chart. This is a table I just put together and shows the average returns for Apple over the last 20 years after the first day of the WWDC, that developers conference. You notice the first day here in this chart, you see a little bit of white, red, very little green. Average stock price is down 0.1%. You move on to the second day, the third day, fourth day, and the stock price is actually down 1.3% on average over the last 20 years. So in other words, if you were to go and buy the stock on the first day of that WWDC and then hold it for the next 4 days, and that is a trade in anybody's books, folks. I'm more of an investor. I like the longer term. We're talking a trade scope right now. But on average, the stock would be down 1.3% the fourth day after the developers conference starts. So that's going to be about Thursday of this week. Now, how can you use this if you're an investor that's looking to get into the stock? Well, certainly you would take the opportunity to get into any stock if it were offered at a discount, right? You wouldn't want to pay full price. Well, here is that chart, same chart of that data that shows us what Apple tends to do after the sell the news. So in other words, this first little dip that we see here, and these are again average returns, stock is down around 1.3 to 1.5% or so 4 or 5 days after the conference start, but then starts to recover. This is your at any time. So this is at any time over the last 20 years what you would average or see as average performance for Apple stock. And you notice that over that 20-day period, and that's what you're looking at over here, you've got the stock catching up to its at any time returns, even though it took this little dip. So what's the lesson to be learned here? do not buy as we run into these events like the WWDC with Apple. Stock did rally as we saw it go right up to 184. Expect for the next couple of days that the stock is going to soften up, especially in this environment right now. A lot of those stocks that are leading the NASDAQ 100 have become well overbought, and they really need a healthy break, a healthy correction, a breather, let's just say. During that breather, that's the time to go in and, as they say, buy the dip. In this case, when we look at Apple stock, you've got a stock that is in a strong uptrend. The 50-day moving average continues to move higher. Investors are seeing this as one of those safety stocks out there on Wall Street, and why not? It is beating the market handily with a 38% return year to date, beating the S&P 500. And again, the strong 50-day moving average trend suggests that the stock is going to continue to make these advances throughout the summer. So there you have it. A little buy the rumor ahead of the WWDC, and sell the news leads to a short-term buying opportunity if you're looking to save a few bucks on Apple. I'm Chris Johnson. I'll be here with more little snippets of information and trading advice on MoneyMorning.com. Have a great day, and I always wish you the best trading success.